I remember when I first started thinking about launching PrivéCareRx. The excitement was there, but so was the overwhelming question, how am I going to fund this? At the time, I didn't fully grasp how much money I would need, not just to get started, but to stay afloat and thrive. Fast forward to the day we began serving patients. I am fully convinced that securing the right funding was one of the most important steps in building PrivéCareRx. There were challenges we faced, and I know that without sufficient funding, even my best idea would have struggled to survive. But with the right financial strategy, you can set yourself up for long term success. So let's get into funding options for your independent pharmacy. By the end of this lesson, you will have a strong understanding of the most common funding sources available to independent pharmacy owners. We will explore options like personal lines of credit, startup loans, small business grants, and private investors, each with its own advantages and considerations. Next, we will discuss how to assess funding accessibility. Not all funding options are easy to obtain, and understanding the approval process can help you determine which source aligns best with your situation. We will also discuss repayment terms and interest rates. Funding isn't just about securing capital, it's about ensuring you can manage the financial commitment in a way that keeps your business sustainable. Finally, we will go over key considerations when choosing a funding source. Every decision you make impacts your long term financial health, so we want to equip you with the knowledge to make strategic, informed choices. By the end, you will be prepared to evaluate the funding options that best support your pharmacy success and make informed decisions. When it comes to funding an independent pharmacy, there are several sources to consider, each with its own advantages and risks. First, a personal line of credit offers flexibility, allowing you to borrow as needed, but keep in mind that interest rates can vary based on your credit worthiness. A startup loan, often obtained from banks or the Small Business Administration, provides structured financing, but it typically requires a solid business plan and collateral. For those looking for non repayable funding, small business grants are an excellent option. While they don't have to be repaid, they are often competitive and require detailed applications. Another route is family and friend investors who may offer funding but with more flexible terms. However, it's crucial to set clear agreements to avoid misunderstandings later. Lastly, personal savings provide immediate access to funds without debt, but using too much of your savings can put your personal financial security at risk. Your priorities will guide your decision making when choosing funding options, so know your priorities. As we consider different funding sources, it's equally important to understand the terms and conditions attached to them. Securing funding is just the first step. How you manage it will determine your pharmacy's financial health. To start, funding accessibility varies widely. Some lenders require extensive documentation and have strict approval criteria, which can delay access to capital. Being prepared with the necessary paperwork can streamline the process. Once funding is secured, repayment terms come into play. It's essential to know what happens if you miss a payment. Some lenders impose steep penalties that could strain your cash flow or affect your credit. Beyond that, interest rates significantly impact the overall cost of borrowing. While lower rates are ideal, it's crucial to read the fine print for hidden fees or variable rates that could unexpectedly increase your expenses. All of these factors tie into the broader considerations for choosing a funding source. The right choice depends on balancing accessibility, cost, and repayment flexibility to ensure your pharmacy remains financially sustainable in the long run. Building on our discussion of funding options, let's take a closer look at one of the more flexible choices, a personal line of credit. Unlike traditional loans that provide a lump sum, a personal line of credit allows pharmacy owners to borrow funds as needed, up to a set limit. This flexibility is especially useful for managing unexpected expenses or covering cash flow gaps. Another advantage is that interest is only charged on the amount you use, not the entire credit limit. However, it's important to keep an eye on interest rates as they can be variable and to make timely payments to maintain access to the funds. For pharmacy owners looking for a financing option that offers control and adaptability, a personal line of credit can be a strategic tool to support business operations without taking on unnecessary debt. Let's explore the key considerations that come with this flexible funding option. Much like a credit card, a personal line of credit allows pharmacy owners to withdraw funds, repay them, and borrow again, provided they stay within their approved limit. This makes it a useful tool for covering unexpected expenses or managing cash flow fluctuations. However, while it offers convenience, it often requires collateral to secure the loan. In some cases, a lender may also require a cosigner to guarantee repayment, particularly if the borrower's credit profile isn't strong enough on its own. This financing method grants flexibility, but with that comes responsibility. Since interest is only charged on the amount borrowed, it's crucial to manage withdrawals wisely to avoid overspending. Without proper discipline, debt can accumulate quickly, leading to higher interest costs over time. For pharmacy owners who can manage their finances strategically, a personal line of credit can be an excellent way to access funding while maintaining control over borrowing and repayment. Now, let's shift our focus to startup loans, a funding option designed specifically to help new businesses get off the ground. Unlike a personal line of credit, which offers revolving access to funds, a startup loan provides a lump sum to cover essential upfront costs. This can include expenses such as equipment, inventory, software, hardware, and operational needs, all critical components in launching a pharmacy successfully. Because these loans are intended for new businesses with little to no financial history, lenders may require a strong business plan, personal guarantees, or collateral to secure approval. While they provide structured funding, it's important to carefully review repayment terms and interest rates to ensure they align with your long term financial goals. For pharmacy owners looking to establish a solid foundation from day one, a startup loan can be a valuable resource for essential investments and to set the stage for growth. And there are banks that fund startup costs for independent pharmacies. Let's discuss some key factors to consider when pursuing this type of financing. First, operational history and collateral are sometimes required for approval. Since new businesses often lack a financial track record, lenders may request personal assets or a detailed business plan to assess risk. One major benefit of a startup loan is that repaying it helps establish your business credit score. A strong credit profile can open the door to better financing options in the future, such as lower interest rates or higher credit limits. That said, the approval process can be lengthy and may require significant documentation, including financial projections, business licenses, and a well structured plan. For those seeking SBA loans, favorable terms and interest rates are possible, but patience and preparation are key. It's also important to note that loan amounts may not fully cover the costs of launching an independent pharmacy. This means business owners should have additional funding sources lined up, whether from personal savings, investors, or lines of credit to bridge any financial gaps. While startup loans offer a structured way to fund a pharmacy, combining them with other financial strategies ensures a stronger, more sustainable launch. We have arrived at small business grants, a funding source that stands out because, unlike loans, grants do not need to be repaid. These grants are offered by government agencies, nonprofit organizations, and private institutions to support small businesses, including independent pharmacies. Because they provide financial assistance without the burden of repayment, they are highly attractive for entrepreneurs looking to offset startup or operational costs. However, while grants can be a great resource, they are also highly competitive and often come with strict eligibility requirements. Business owners must carefully research available opportunities and be prepared to submit detailed applications to demonstrate how funds will be used effectively. For those willing to put in the effort, securing a small business grant can provide valuable financial support without adding debt, making it a smart complement to other funding strategies. If you are interested in pursuing small business grants, there are a few important factors to keep in mind. First, these grants are often highly competitive and the selection process can take significant time, as many applications are reviewed carefully. It is also important to note that grants typically come with restrictions on how the funds can be used, usually limited to specific expenses such as equipment, research, or marketing. On the positive side, receiving a small business grant can provide a boost to your credibility. It serves as a mark of trust and approval, signaling to potential partners, investors, and customers that your business is recognized and supported by reputable organizations. Small business grants are accessible through a wide range of channels, including government programs focused on economic development, private foundations supporting entrepreneurs, and industry specific initiatives aimed at healthcare. By exploring these access points, you can identify grants that are best suited for your pharmacy's needs and goals. Another option for funding your independent pharmacy comes from family, friends, or angel investors, each offering a unique way to secure capital. Unlike traditional financial institutions, these sources come with more flexible terms as they are typically based on personal relationships or a shared belief in your business's potential. Family and friends might be more willing to invest in your pharmacy because they trust you and want to see you succeed. Similarly, angel investors, individuals who provide capital to startups, often take a hands on approach and may offer mentorship or valuable industry connections. However, while this type of funding can be beneficial, it's important to set clear expectations and document agreements. Mixing business with personal relationships can sometimes lead to misunderstandings or strain personal bonds. So, having a formal agreement in place is crucial to maintain transparency and avoid potential conflicts. In short, funding from family, friends, or angel investors can provide crucial support with fewer formalities, but it requires careful management to balance both financial and personal interests. As an independent pharmacy owner, it is important to understand both the opportunities and the challenges that come with this option. As we've discussed, funding from family, friends, or angel investors provides not only financial support, but also the potential for valuable connections and guidance. However, it's critical to maintain transparency and clearly outline expectations from the start to ensure smooth communication and avoid any misunderstandings down the road. Now, let's consider some of the potential downsides, such as the risk to personal relationships and the possibility of giving up equity in your pharmacy. These factors can impact both your business control and your personal connections, so they must be carefully weighed before moving forward. Your priorities, a solid business plan, clear communication, and the right expectations can make investors a powerful resource for funding your independent pharmacy while offering more than just capital, but also a network of support and expertise to guide your success. Now let's explore the option of using personal savings to fund your business. The primary advantage of this approach is that there is no debt and no need to give up any equity in your pharmacy. This means you retain full control over your business decisions without having to answer to lenders or investors. It also offers the flexibility to use the funds as you see fit without restrictions. However, it's important to recognize the risk involved. Jeopardizing your personal finances is a significant concern, as using your own savings means putting your own financial security on the line. If the business does not succeed, you could face not only business failure, but also personal financial strain. Additionally, you may be working with limited funds, which can restrict your ability to fully invest in the growth of your pharmacy. This can also lead to emotional strain if the business faces difficulties, as your personal savings are directly tied to its success or failure. While using personal savings can be an empowering way to fund your pharmacy, it's important to carefully consider both the control and risks before moving forward. Having a strong financial cushion and contingency plans can help mitigate some of these challenges. As we've discussed, it's essential to have a solid plan in place, complemented by additional sources of funding to ensure you're not putting all of your financial security at risk. One of the key elements to safeguard your business is to create a contingency plan. This helps you handle unexpected challenges by identifying potential risks and putting strategies in place for quick, effective responses. Having a contingency plan ensures financial stability and minimizes disruptions that could otherwise impact your pharmacy's success. Moreover, using your own savings demonstrates skin in the game, signaling that you're serious and fully invested in the success of your business. When you invest your own money, it builds trust with others and shows your confidence in your business's potential. This commitment can also push you to work harder and take responsibility for your pharmacy's growth, knowing that your financial future is tied to its performance. While using personal savings can provide control and demonstrate commitment, it's crucial to have a well rounded strategy with backup funding and contingency plans to ensure that your pharmacy remains stable and resilient in the face of challenges. In this lesson, you've learned the importance of exploring various funding options for your independent pharmacy. We've discussed different funding sources such as personal savings, startup loans, small business grants, and funding through family, friends, or investors. You now understand the benefits and challenges that each option presents, from flexibility and quick access to capital to the risks involved, including personal financial strain and giving up equity. We've also covered the need for careful planning, contingency strategies, and how to maintain transparency and clear communication with investors or lenders. These tools will help you make informed decisions about which funding options are the best fit for your pharmacy while protecting both your financial stability and personal relationships. The next slides contain the module worksheets and call to action items, which will help you take actionable steps toward securing the right funding for your independent pharmacy. By following these steps, you will be on track to create a sustainable and successful independent pharmacy.